And actually, I think that's actually a good segue into one of the next things I want to talk about, and that is the down payment. Because most people are familiar with, like I said, residential real estate, and they know that a conventional deal is 20% down. When it comes to commercial real estate, that specialty use or the type of use has a big part or plays a lot into the amount that you actually have to put down into a deal.
Right.
Can we talk just a little bit about specialty use buildings and kind of what you see from an LTV standpoint or loan to value standpoint on these particular types?
Absolutely. The standard, now we're talking about standard commercial properties, be it office and so on and so forth. Yeah, you'll be at that 80% loan to value, i.e. the loan can't be more than 80% of what the true equity of the property is. But when you start to delve into more specialty use property, kind of one-offs and types of buildings that are different in very specific ways. Let's take dental offices is always a good example because there's a couple things that go into it. One, there's a very certain client base that would be interested in that property on resale. You're not going to turn around and sell a dental office to then become a full-fledged gym. There's only a small group of buyers for that type of property, number one. Number two, should you want to change it somewhere along the line, you find a buyer that likes it but wants to do it, there's a lot of leasehold improvements and capital that needs to be injected to get it from point A to point B. As a result of that affects your loan to value at certain times. I mean, specialty use could be in the 60 to 65% loan to value due to those aforementioned
let me give you
criteria.
two examples that I think kind of illustrate the point. And I think I talked about one of these deals in the past, and that is we worked when I was at a bank a few years back. We worked with a water therapy center, and so basically what happened?
Pool in the middle, right?
There was an office space. There are all these offices surrounding this pool in the middle of their building, and they were treating patients in the pool, helping them do physical therapy. Okay, we only advanced like 60 or 65% of the value on that.
Who are you going to sell that building to?
Yeah.
As is, assuming you don't make any adjustments, you keep the pool in it or whatever. You want a common area for employees to swim. Who other than a water treatment or water physical therapy type business, how many of those are there?
I know.
Like, who are you going to sell this to?
So another example, I worked on a deal for this big ice manufacturer. So like basically the company,
big fridges in there and stuff.
They converted a huge portion of their warehouse space into a walk-in freezer.
Right.
And so they had a slanted floor. They had these cooling panels and insulation along the sides. It was all connected into the building, and so we were only able to offer a certain amount of loan to value on that. So it was like probably, I think it was like 65% again on that one. But those are like examples when there's something specific about your needs in that building, then that's going to reduce the amount that the bank is willing to be willing.
That will require you to bring more capital to the table. So again, something to be prepared for, knowing what you're getting into and why the landscape might be a little bit different.